Welcome back. I am Emma with AQUA Real Estate. We continue with the third and final part of this series, Form 22A. Financing Addendum. In this lesson, we will cover 3 more topics. First off, we will discuss how to handle a deal when the loan fails. Then cover what happens in a transaction that has a low appraisal. Before finishing up with the fine print clauses at the end of the addendum. It is not sufficient to notify the listing agent by text, call or email to inform them the loan has failed. The listing agent will need written confirmation from the lender with the following information. 1. The date of buyer's loan application, including a copy of the loan estimate provided to buyer. The listing agent should review this to ensure the buyer applied for the right type of loan and applied within the timeline listed in the agreement. 2. The buyer had sufficient funds to close. The listing agent will also review this to ensure the buyer had enough money for their down payment. If the funds were contingent, the contract should have disclosed those funds. And 3. The reason buyer's application was denied. This is key, because it helps the listing agent understand what caused the deal to fall apart. If the buyer's loan is denied by the lender, then the buyer agent must also provide the listing agent with a notice of termination due to financing being unavailable. The form that you use in this situation is Form 90I. Clause 4 goes into detail about when the buyer can keep the earnest money. The clause says that if the buyer demonstrates they acted in good faith and could not obtain financing, that the earnest money shall be refunded to the buyer. The only exception is if the buyer waived their financing. If the buyer waives the financing, they will lose the earnest money regardless if the loan was approved or not. That is unless the seller terminates the agreement first. Our next topic, appraisals and what to do if they appraise below the purchase price. If your buyer is getting a mortgage, the lender will most likely require an appraisal to confirm the property's value. The appraisal is a third-party valuation of the property. Neither the buyer or seller have any control or say in the pricing. The bank uses this value to ensure the bank is not lending more than the home's worth. So, what happens if the value comes in lower than the buyer's purchase price? The answer, to be honest, a whole heck of a lot. First, the buyer's agent must give notice of low appraisal to the listing agent within 3 days. The form to use for this is Form 22AN. Along with 22AN, the buyer's agent must also provide the listing agent a copy of the lender's appraisal. After the buyers have given the notice of low appraisal, the seller has 10 days to respond and has some really tough choices to make. The choices the seller has are: A. Do a reappraisal, but the costs come out of the seller's pockets. This option has no guarantees as the lender may not accept the reappraised value. B. Reduce the purchase price to the amount specified in the appraisal. C. Propose a price that's lower than the purchase price, but higher than the appraised value. The buyer will make up the difference with more down payment at closing. Or D. Reject the buyer's notice altogether. If the seller chooses to reject the appraisal, then the buyer will have 3 days to make a decision to move forward at the full purchase, and also waive their financing contingency. Or choose to back out of the deal. If the seller chooses to be a little more flexible and reduce the purchase price, but doesn't want to go all the way down to the appraised amount, then the buyer still has 3 days to decide to either accept the new lower agreed price or reject the seller's offer and terminate the contract. If the seller agrees to reduce the purchase price all the way down to the appraised amount, agents love to hear that news. The buyer is bound to the contract and must purchase the home at the appraised price. But there is one big exception. Government-backed loans are not obligated to continue with the purchase when the home appraises below value, even if the seller reduces to the appraisal price. If the buyer has a government-backed loan, they can still move forward with the purchase if they wish. The buyer has 3 days to decide after the seller responds to either move forward or terminate their agreement. In the case that the seller chooses to pay for a new appraisal, then the buyer does not need to act. Once the appraisal is in, the lender will review the new appraised value and make a decision if they will approve it. And now for our last and easiest section of the series: the fine print. The last 4 clauses of Form 22A often get overlooked because they are at the end. But just because they are at the end doesn't mean they are not important. We will start with paragraph 6. It very rarely ever happens. But the clause states that the seller shall allow the lender to perform any required inspections. Don't confuse this with the buyer inspection. That is a completely different inspection. This is for the lender only and typically is only done in government-backed loans, such as VA, FHA, or USDA. Paragraph 7 is more verbiage regarding government loans. When a buyer is getting a FHA, VA, or USDA loan, the seller and buyer are consenting to sign documentation provided by the government. When the buyer is obtaining VA financing, then a VA amendatory clause will be required to be signed by the seller, which adds an extra layer of protection to the buyer, which is outlined in this clause. The 9th and final clause in this addendum adds more verbiage about the process of extending the closing date if a lender has to adjust the closing disclosure. If the buyer's lender is required to give a corrected disclosure to the buyer, through no fault of the buyer, then closing may be extended for up to 4 days to accommodate those requirements, and does not require mutual agreement by either the buyer or seller.
I hope you enjoyed this lesson and found it useful. Be sure to check out our other great training videos inside AQUA University. Hey there, are you watching our training videos but not yet an AQUA agent? We would love to have you. Our 100% commission model, world-class training systems, technology, and marketing make AQUA the coolest and fastest growing brokerage in the Northwest. Go to our website, getaqua.com/careers to learn more. Join the club.